All right, all right. Hello, everybody. Welcome to another morning live stream. This is Tuesday, July 26th, 2022. Uh, and we are one day away from Wednesday, July 27th. Let me share this in the Discord. If the Wi-Fi is kind of crappy, just give it a second. It's gonna catch up in a minute. Yep. We got the morning stream. Richard, what's up? Uriel, what's up? Let me exit out of all the stuff that's causing the Wi-Fi to be a little crappy, to say the least. The Wi-Fi just decides to act crappy when it wants to be crappy. It's like, hey, today I want to be crappy, so I'm gonna be crappy. Nice bedhead. It's not just bedhead. My hair is like this throughout the entire day. It just looks a little better because I have a haircut, but that's what it is. Rachel, hello. Thank you for being here. We've got a lot to talk about, guys. We've had earnings from CNBC, or not from CNBC, from GM and McDonald's that we're going to talk about. Walmart has fallen off a cliff. 9% after hours gone because of excess inventories, which technically should be good for inflation, given they have so many inventories. But we are going to sort of be analyzing what's happening. Also, an exclusive that just came in through the news. The Kremlin is likely to keep vital gas flows to Europe at minimal levels as long as the standoff over Ukraine continues. The Kremlin obviously being in Russia, deciding that, hey, they're not going to be giving that much gas to Europe, which is not good because we only have a month till winter starts. I mean, but I know September, October is not as cold, but it's going to get there. And if we don't have the gas, that's not going to be good. I know it's blurry, everybody. Just give it a second. It'll clear up in a minute, hopefully. If not, then that'll be sad. But, Lucas, what's up? Ahad, what's up? Glitch Life, what's up? All right, let's open up Webull. Let's look at some of the stocks that have been doing a variety of different things that I think is important to talk about. So let's go here. Let's open up Webull. Walmart falling yesterday. It has not fallen that badly in forever. And the reason for that is primarily because they decreased their full year guidance, and they usually never do that, right? That's not what Walmart does. And the reason they did this is ultimately because they felt that they're going to have too many excess inventories and they're not going to be able to sell it off. Yeah, guys, I'm sorry on the freaking Wi-Fi. It should be better in a second. I don't know why randomly today it started being stupid. But let me at least open up Webull. Hopefully Webull is not the most harder to see. Glitch Life, you said you got a margin call? Yeah, I'm sorry about that. That was that one small trade you made, or not small, but like mistake you made last Friday, right? That's rough. It happens. I mean, it's never happened to me because I've never played with it like that, but I could understand how it does potentially happen. Your cam is like 144p. Yeah. I hate it. Okay, it should get better. I just saw the Wi-Fi signal go up. In like 2 seconds, it should get better. But let's go to Walmart. Okay. WMT. By the Glitch Life, I feel bad for that. Hopefully it gets better. It really just sucked getting margin called. Yeah, I never got margin called, but yeah, I hope it gets better. As long as Palantir and DNA go up over the long term, you'll make the money back. I think that's the only way to look at it. So Walmart down 8% yesterday, 121. So I thought this was starting to look nice at 140-ish. Then, when it started to go down, I was like, okay, this is what's happening. So did Target have an effect because of Walmart? Yeah, Target went down 5% pre-market as well. Wow, Target's at 150. Target was recovering in the 165 area. Wow, now it went down. S&P is also at 393. So the July rally to the 390s has holded to be true. Like July always does better than most times. The problem is that it's not been the rally you would think we get to the point where it's like, in the 400s. And there's a lot of things going on, which might make things worse. Tesla below 800. So that entire rally Tesla had going up to 800, that is gone. Now, yes, it is at 799. Maybe it stays at the 805 range, but if it gets back to the 750s, then the rally and that momentum from the rally is gone. Which just goes to show it's hard to keep this stuff up. Netflix at 218, which is better than 173, but it was at 225 the other day. Like, I don't know. Palantir. Oh, by the way, I did buy some Palantir yesterday. About $250 worth of Palantir, about 25 bucks. I'm starting to look at trying to put $1,000 a month into Palantir, or at least 750 a month. So I've started my official DCA into Palantir. Now I haven't done it for the past couple months, and a lot of you have been geeking me at that. The reason for that is because A, I've been trying to maintain my dry powder. B, I've been trying to also just feel, a little bit more of the market. I think Palantir, I think a lot of stocks potentially may still go down, but the goal has been to now get it under 10. I'm like, all right, under 10. I don't really care what price it is at this point, but I would love to get it at 7 or 8, obviously. And so that's kind of what's going on right there. Yeah, Glitch Life, if you want to talk to Gabe, he actually really can help you with some of the stuff you may be going through. Especially because this is maybe, I don't know if it's your first time being margin called. Gabe really understands options well, so I would definitely recommend talking to him. Yeah, you all have been geeking me for that. Are you worried about CPI data this month, or will the big tech stocks MS go? Well, that's what I did a video yesterday on what they need to crush earnings. And ultimately the idea was they need to beat certain revenue numbers. Google needs to show Google Cloud growth. Facebook needs to beat $28.9 billion in revenue. There's a lot of things that need to get done in order for them to beat revenue. I don't know. I think I'll check which one reports today. I think it's Google. Google reports today, and we're going to know what happens. All right, in 30 seconds, the market will be open. We have a bell on this channel. The bell will be ringing when the market does open at 9:30 a.m. Thank you so much for being here. We're going to go through a bunch of different news. We have Russia stopping gas. We have GM and McDonald's earnings that I didn't pull up yet, but GM not really doing that well. And then we have a bit more news on the earnings reports that are coming out this week to see how these companies ultimately play out. So the market is soon to open, and we will see what ends up going on. There it is, 9:30. The stock market is open. Wake your ass up. It is time to see what's going on in the stocks of the markets. All right, so first thing I want to go to is GM, because they reported earnings. They're down 1.78%. Okay, so that's a decent amount for GM, because GM is not really a growth stock, so going down a percentage or two is not the best. GM is down. Twitter is freaking 40 still. Like, people still think Twitter has a lot of juice in it. Spotify got hit 3.72% this morning. Spotify does release earnings tomorrow, I think before the bell, so we will know how Spotty is doing. You should expect them to have more than 182 million paid subscribers. That is what they had last quarter. The quarter before that, they had under 80, so they increased 2% quarter over quarter paid subscribers. I don't think they would lose subscribers. That would be bad. I don't think that's going to happen. I think they might get to like 184, 185 million paid subs. And advertising revenue is also something we want to see, because that's what they're trying to make a bigger player. Snapchat is below $10, $9.85 still. S&P is getting down. QQQ finally below 300. QQQ is below 300. Yes, Shopify is cutting 10% of their workforce. That's not the best. Well, it could be the best for the company, especially if you're a shareholder. Well, Sam, how do you feel about it? I mean, why does it say Shopify is down 15%? What the? Oh my. 15%? Why are they down 15%? The workforce news to me, it's supposed to be good, right? Because they're cutting costs. But I guess you can interpret it as bad as well, because they're like, oh yeah, I think it was at 34, right? Or 35. That's why it's down 50. Wow. But it could be bad as well, because ultimately at the end of the day, that means that they aren't making enough money, so they can't afford to pay enough people. So like their earnings are not going to be the best. That partnership with YouTube was great, but like at the end of the day, that's not going to move the needle, right? That's not like yeah, people can sell stuff on their YouTube channel, but Shopify is a tough one, man. Shopify is a tough one right now. I love the company. I wish I bought the stock versus used the product back in 2017, because I was like trying to build an e-commerce store, because I was young and ambitious and hustling. I was like, maybe I should just bought the damn stock, because the stock was like $80 pre-split. So yeah, Shopify. I love the Shopify, but I think the stock is an issue, is in some turmoil right now. Coinbase at 62, down 7.5%. Let's check Bitcoin. Where's Bitcoin at? Where's Biddy? Biddy, wow. We got to 23. We got to 24 at one point, right? And now Bitcoin's down to 20,930. And if it gets another $1,000 down, it's at 19. So then ETH. So anyone know why this is happening with Bitcoin and ETH? Yeah, ETH was doing well as well. It was at like 1,600. Now it's at 13. Anybody in the comments know what is going on with ETH? Sam says they said they overestimated the growth fueled by the pandemic boom, that people are now going back to old habits. Still doesn't impact my long-term view. So it's a pandemic story. Interesting. The only stock that hasn't collapsed because of the pandemic is Tesla. And I think Elon has the ability to make sure that doesn't happen. Like when I mean collapse, I mean like go like Shopify from 1,700 to 300 is a collapse. Tesla from 1,200 to 700 is not a collapse, because 1,200 you could argue is absolutely insane. $700 billion market cap, that's still a lot, right? 1,200 was just like a euphoric moment, but most people say it's overvalued at 700. So if Elon can keep it in the 7 to 8 hundos and like just pull forward over the next 5 years and never have to look back at like 400, 500, he succeeded at being the one stock that's not been a pandemic stock and gone down because of the pandemic. Because every stock went down because of the pandemic. Facebook, all of them, every single one. All the people on Amit's Discord get to see Bacon do 100 push-ups because he has to record it. I'll be looking forward to our Zoom call this Wednesday. If you want to join the Discord, definitely join, or the Patreon. What else will yell? Okay, so let's go to GM earnings. Let's open up that real quick because I want to speak of that. So let's share my screen right here. The consumer spending on Walmart is the big thing that I also think we need to talk about, because if Walmart has all this inventories, that means they can't sell shit, and they can't sell shit because people aren't buying shit, which might be good in some respects, might be bad in some respects. I know the quality of the thing just went down. Okay, should be better. So General Motors reported second quarter earnings that missed Wall Street's estimates after supply chain issues led to make fewer vehicles. GM confirmed that it secured the battery materials needed to build 1 million EVs a year by 2025. Wow. Okay, so they're going head on to try to do this. They had 1.14 earnings per share adjusted, besides 120. And they expect they had 197 second quarter. So it's down significantly from last quarter. 35 billion versus 33 billion in the second quarter. Okay, so they beat on rev. 2.3 adjusted versus 4.112. Okay, so but everything's down. So they beat on rev from 2021. They lost on earnings per share, adjusted EBITDA, and adjusted EBITDA margin. Wow, 12% a year ago. Now it's 6.6%. Car companies really don't have the best margins. That's why Tesla's amazing, because they have 30%, which is why people say they're a tech company. But to get your margins cut in half, that's a bit tough. That's a bit tough. CEO says that GM has binding agreements securing all battery-related raw materials. This is the big thing about batteries, right? If Tesla's struggling to get lithium and batteries and build their network, I mean, it's going to be hard for these other companies to do it as well. The company told investors on July 1st that it had 95,000 vehicles with missing components in its inventory. We have been operating with lower volumes due to semiconductor shortages the past year, and we have delivered blah, blah, blah. Okay. So GM, the stock is down 30 to 33. Let's go to Walmart. I want to see that as well. Hello, everyone, Liquid Ribs. Let me see. How will Tesla keep the high margin? Well, if Tesla is able to license their software and keep innovating on like the stuff they're doing, and they have insurance, that's like high margin stuff, then I think they have a chance there. So Walmart plunged 8% Tuesday and dragged others retailers with it. Target and Kohl's each dropped 5%, while Amazon, I didn't even know this, Amazon dropped 4%, Costco shed 3%. This makes sense, right? If Walmart's inventory is being hung up and they're losing 8%, then it makes a lot of sense that all the other big box retailers are going to be losing a lot of money as well, or going to be showing that they're not going to be able to make the proper sales that they need to be in order to reach their valuations, which is why Amazon earnings are going to be interesting as well, to see how retail traders are, or how retail is engaging with the product, with their company. So Walmart, let's go down here. Walmart shares slump. Blah, blah, blah. So their shares fell as the company cuts its profit expectations as inflation forces. Okay, so that was the main reason, right? Their full year profit expectations. I actually watched this guy, Bill Simmons, who was the former Walmart US CEO, basically said that the shift in spending has left more items on the store shelves and warehouses, forcing big box retailers to aggressively mark down items that customers don't want. That is proving Kathy's thesis that supply chains are getting better and inventories are getting better, which means inflation has potentially peaked. She's been wrong for the past 2 months, but maybe because a lot of the tide is changing, especially with commodities going down, we're believing that inventory is going to peak. If that's the case, then there may be a world in which we see less inflation on the CPI print next month, which means maybe deflation. But that's, a lot of stuff has to go right for that to happen. Walmart says that now it anticipates earnings per share for the second quarter and full year to decline 8 to 9% and 11 to 13% respectively. I think that's what really got the stock. It had previously expected them to be flat or to drop by about 1% for the full year. They've 10x'd that drop. They said now they might drop around 10% in terms of adjusted earnings per share for the full year and for the second quarter. Yeah, that's basically the Walmart story and what's going on in Walmart. Google earnings are today. You have Google calls. Wish me luck. Well, let's see. I think YouTube slows down. I think Google Cloud goes up. But outside of that, I have no clue. Outside of that, it's gonna be very interesting to ultimately see what happens and see how this goes up. Okay, let's watch a video. Here we go. We're gonna see investors are incredibly nervous for earnings. I would imagine they are. So let's see what we have here. No pain, no gain. Buy the pain. Yeah, I agree with you, Joel. At the end of the day, you just gotta get through it right now. All right.
It's a little bit of a mixed picture. I mean, the Walmart piece is the one that everybody's focused on, but we've also had some better earnings, or at least decent earnings, from the likes of McDonald's, and then on the UPS is actually looking up. How do you sort of make sense of this?
Well, I think the market is feeling it as if it is a yoke around its neck that might be tightening, and it doesn't know how tight. We either go the way of Netflix, where it's not as bad as expected and the stock zooms, or you have a name like Snap, where it's worse than expected and it's a disaster. So there's a very big range, and investors are incredibly nervous. So yes, you're going to have better than expected. I mean, if we even look at what we saw with Coke, extremely good numbers. I think that the GE numbers better than expected, but they've had plenty of quarters to be cutting costs and preparing for a time where things start to improve. Walmart, yes, the middle class, many shoppers don't have the available funds that they had. And so it's not surprising that this was a weak quarter. But if the stock's down less than 10, I don't think that's a disaster. And we're just walking this very thin line carefully, hoping that if the weak economy, and we know it's weak, is not taking things down more than, worst case scenario, we can live with that and maybe not retouch the lows again.
So, but here's the sort of perverse relationship between the earnings story we're hearing today and what we may hear or not come Wednesday. Probably less about the 75 basis point number, which I think everybody agrees is upon us, but really what comes next and what kind of forecast you think the Fed gives us. The worse these numbers are, the less they may have to do, right?
Right. Well, correct. And I feel that what we're getting so far confirms 75 basis points. Unlikely that 100 basis points comes up as something realistic. We're meddling along. We've got an economy that's weak, but not incredibly weak. Inflation may be peaking. We're going to hear more about inflation from the Fed, and I don't think that they're going to be incredibly hawkish on the upside of rates, because we've seen gas prices come down, some commodity prices, real estate seems to have stopped moving higher, and a few other categories that would be able to calm down the fears of we get 100, maybe, several of those. I mean, that seems extremely unlikely. And this could be the worst. And we can start to see something in the second half of the year that calms markets down and feels as if it's beginning a recovery again, whether or not we call this a recession.
What are you expecting to hear from some of the big tech companies that we're going to be hearing from later this week? We got Microsoft obviously on tap, Amazon and the like.
Yeah, well, remember, if we can remember back to a quarter ago, the market was moving along very nicely, peaked in January, and investors were nervous about what the big tech names would say. What they said was not comforting. The market dropped, incredibly fast from the beginning of earnings, mid to late April, May.
So today I might do market close, guys. Someone actually put that in the chat. I think I might do it because you got Alphabet and Microsoft. Those are things to talk about in the market close. I might live stream that today. Wednesday, Etsy, Spotify, Meta. That's gonna be big. And then Thursday we have Roku, Apple, Amazon, and Intel. Yeah, okay. I might be doing market close today to talk about Alphabet and Microsoft because those are things you want to dive into.
First half of June. And I believe that was precipitated by a lot of the tech names, right, and concern about where they were going. The resilience of a name like Microsoft, that the multiple has dropped down. I mean, it's in the 24 range. It sells at about the same level as, Pepsi. You can make a case that the tech stocks, Google, you strip out other businesses in cash, and that's 16 times earnings. So we're below a market multiple. And these names are resilient over the long term. They should have earnings that we can feel are comfortable over a 5-year period of time. We believe they're attractive right now. If they turn out to be less, I would say, resilient and stable than forecasts and investors are believing, I think that's going to be a problem this quarter because they will lead the market down again as they did before. That's not our belief. We think that down 20% in a market is sufficient damage, right?
Okay, let me talk very slowly because I definitely messed up your ears on the last one. So the thing about, I don't know why my mic does that. Every time I first talk, there's a peak at the top and then it normalizes. I think it's a StreamYard thing as well. But anyway, so she says down 20% of this market is enough pain and damage. And if you're betting on Facebook, Google, Amazon, Apple before earnings, you believe that it will. So like Amazon being at 102 or Apple being at 130, or 129, I think it hit. Facebook hitting 156 or 155. That all connected together is the pain that we, like a lot of people believe collectively has messed up the market enough, and we don't need to be better, or it doesn't need to be worse. The question is, how bad are earnings going to be? And I kind of agree with her. I don't think earnings are going to be that bad to the point where like you see another 10% drop. I mean, that would be incredible. And we saw that with Facebook going from 325 to 240 that one day, right? Or Netflix going from, it was like 560 to 314. That, like, we went through those dramatic declines, and it's really weird to imagine that it would happen again. Like, because we still have an economy, they still produce a lot of values and services, right? McDonald's earnings, revenue, they've missed 5.7 versus 5.8 billion. This is, by the way, put in the chat how many times people eat McDonald's a week. For me, it's like maybe once every month, maybe, if that. But I would like to know. I'm more of a Dunkin' guy. I definitely do get Dunkin' probably 6-7 times a month, I would say. Earnings per share, 255 over 247. So they had a second quarter net income of 1.9 billion, 160 a share, down from 2 billion last year. So it is down. The company reported a 1.2 billion charge. So that makes sense. Russia, Ukraine, they had to shut all operations there. Inflation dragged down the company's earnings despite price hikes for the full year. McDonald's is projecting 12 to 14% inflation for food, which makes sense. I've seen it even in my Chick-fil-A. It used to be like $4.79. That's like $5.80 for a burger. I'm like, that's too much. Net sales fell 3% to 5.72 billion, hurt in part because of the closure of McDonald's in Russia, Ukraine. Yeah, if they didn't close Russia, Ukraine, they probably would have beat on revenue. International Development License Market Division saw its same stores climb 16% of the quarter. McDonald's didn't have bad earnings. Let's look at the stock real quick. McDonald's earning, or McDonald's stock. It's up, right? Yeah. I mean, it's relatively up. It's not that bad. Yeah, it's not crazy today. Okay, so McDonald's was not bad either. GM was McDonald's was not bad. And we're gonna see earnings for the rest of them today. 4 to 5 years at most. Yeah, I can understand that. I will never eat McDonald's again in my life. It's absolutely trash. It's not the best. It's not the best. Stopped eating McD's a long time ago. 2 junior chickens for $5. Yeah, I want McDonald's to go bankrupt so bad. Well, they definitely don't have the nicest food, I would say, or the best food. Okay, let's look at one more thing that I would like to pull up real quick. This is GM. Is this the one we want to do? Yeah, we want to do this one. GM secured enough material. Actually, do I want to see this one? Give me 1 second. There's a couple of different ones I wanted to see. Let me look at the comments real quick. Yeah, I don't need that shit. We have Baba today? Baba's reporting? Wow. I didn't know Baba was reporting. Goodness. Baba. Okay, so let's open up this one. We also saw FTX. Did you guys see they bought a South Korean exchange the other day? That was very, very interesting. All right, we're going to talk a little bit about inflation, and then we'll move on to earnings for big tech and what we see for that. So we're going to watch a little bit of this, and then we're going to move on to earnings.
And your complaint with this specifically, when people start talking about the money supply, it's how big the Fed's balance sheet, how much it ballooned over the last several years.
That's right.
And just trying to rein that back in.
Right.
They didn't start doing that.
Exactly.
They didn't start
That's
tightening that until after they started raising rates.
They started June 1st, and then the pace has been pretty tepid. I think they need to accelerate that. They may need to sell mortgage-backed securities. Powell has indicated they might consider that. But I would stand down on the big interest rate hikes and focus on constraining money supply by draining cash out of the session by shrinking their portfolio, including selling securities at a loss if they have to. You know, we're all taking losses on our investment portfolios. I'm sorry. I don't think that's a good reason for the Fed to say we don't want to go too fast. It's, you know, and that hits, you know, that hits longer term rates, which is really where it's going to be most effective. You've got an inverted yield curve now because they're really, you know, they're hitting short-term rates, but the long-term rates, the markets are keeping low. And the yield conversion is a very strong predictor of recession. So I do think they could ease pressure on the yield curve if they stood down on short-term rate increases, started shrinking their portfolio more aggressively, but let the market take the interest rates wherever the market's going to take the rates.
That just sounds like you're throwing out sort of one of the mandates, the full employment mandate at the, you know, to totally focus on the dollar stability. Man, I mean, if you're not data dependent, if you just go in and you say, look, inflation's too high, we messed up, no matter what, we're going to continue with this rate hiking, and then you see the economy fall off. You can see the conundrum of what that, if you're not data dependent.
No, well, I actually think that by stop micromanaging short-term rates, focus on shrinking money supply, that's going to increase our chances of a soft landing more than what they're doing right now.
Okay, so again, a lot of people just feel like inflation is not going to be good right now. So even though commodities have freaking gone down, or potentially peaked, or gone down, inflation peaking, people still are not bullish on it. Mohammed, he's one of, I forgot his last name, but he's one of the most well-respected guys on CNBC. He feels like we still have a long way to go down in order for this to normalize. Look at the market; it's entirely red. I mean, I don't see anything that's green. I don't know if I'm missing something, but I see nothing that is green. I mean, NEO is up a little bit. SoFi actually got above 5, which is great. It's at 6, but it's still down. Lilium, a Palantir SPAC's down. Where's Wejo? By the way, I will be doing an interview with CEO of Wejo tomorrow. Not going to be posted until like a couple weeks from now, but Wejo is an exciting company to me, but they've been just destroyed as well. Palantir. Where's TDoc? Where's Teladoc? TDoc. TDoc's at 40, down 3%. Where's Ark? Now I got into the Ark loophole again. I want to see what all the Ark stocks are at. All right, Ark's at 44. I'm waiting to buy some DNA. Is DNA down today as well? DNA's at what? DNA's at 2675. Yeah, DNA was at 32 for a long time. Zoom is at 102. Roku is at 78. Wow, 78. Why is Roku down 10%? They didn't even release earnings yet. Oh my gosh. Please remember, Roku is like second in Kathy's Ark. Actually, let's go to Ark Invest Daily. What have they been buying? Let me pull it up real quick. Also, the other reason I was going to buy some more Palantir today, but I'm like, maybe I should wait till after earnings because the whole market might just go down as a result of earnings. So Ark has been buying. Let me share my screen real quick with Ark. Wow. Why is Roku down 10%? I mean, is the Snapchat news? Could that be the reason? That can't be the reason. I know it's advertising, but Ark bought, wow, another 1.4 million of DNA. Goodness, she likes the stock. And then that's pretty much it. Okay, how about a couple of days ago, she bought, nothing. She's not buying her big names. She's not selling her big names either. Remember, she was liquidating a lot of Spotify. She's not doing that anymore. And she has 700,000 shares left, down from 2.3 million. She's buying a lot of DNA. Nothing super exciting for Ark. Pretty much it for Ark. DFC Palantir is up slightly. Oh, let's go to that. DCFC on Palantir, their SPAC, is one of my favorite SPACs. It's tritium charging. I haven't done enough due diligence in their financials to buy them, but wow, they're 5. Last time I saw they were at 10. They were one of the only ones that stayed at 10 for the SPACs, but I understand why they fell because the whole market fell. But they're one of the most exciting SPACs because they're actually expanding. They're in Australia, New Zealand, they're in Tennessee. They're building all these different plants. They were on the press stage when Biden was talking about EVs and like their charging station was there. And there's so many charging station companies, but they picked the Tritium. So I like Tritium a lot. I just don't know enough to buy them. Netflix at 217. Enphase, where's Enphase? Is it below 200? Enphase. I just had it. There it goes. Oh no, 217. Enphase at 217 as well. Nvidia at 168. Robinhood, FTX own 7% of these guys. Yeah, the whole freaking market is red. The whole market is really, really red. All right, so let's discuss what we're gonna have to go for. Let me share my screen. Here are the earnings preview for Google. This is what we're looking for at the end of the day if you are thinking of Google or buying Google, and I'll be covering it probably today on the live stream. So analysts estimate EPS of 1.14 versus 1.36, so definitely still below full year 2021. Google Cloud revenue is expected to rise year over year, but at the slowest pace in at least 4 years. I believe that growth is somewhere between quarter to quarter 37% and year over year maybe 11 to 12%, but it's a slower pace, but at least it's expected to get better. And revenue is expected to rise, but at a slower rate compared to recent quarters, which is why, again, Google is likely not your 10x in terms of growth. Google is your hopefully 1 to 2 to 3x over the next 5-10 years potentially, but Google obviously wants to grow a lot more than that. This is the S&P 500 compared to Google. So if you had bought Google or the S&P since July 2021, blue is the Google, yellow is the S&P, you would have done a little bit better with the S&P. Well, a lot more. Google's down 16%, S&P's down 10%. So the S&P has outperformed Google over the past year. Now, Google had higher highs, obviously, at the very top. You can see right there. So, I mean, Google did well for itself versus the S&P, but as of current earnings, it's not really been the best. Historically, Alphabet's quarterly EPS performed erratically from 2018 to 2020. About half of the quarters saw declines, 3 of those more than 20%. Starting in Q3 full year 2021, Alphabet begins a sustained streak of EPS growth. So only since about a year ago, a little less than a year ago, Google has been putting up consecutive quarters for the subsequent 6 quarters at EPS gains of at least 62%, and EPS had more than doubled year over year in both Q1 and Q2. And again, a lot of this had to do with, unfortunately, Fed liquidity and artificial. So it's not just Google's growth. It's a lot of a friendly macro. If the macro is not as friendly, if we're doing quantitative tightening, these are things that it needs to be thought of when we're thinking of earnings. That's why Chamath, and I know people don't like him, but he was on the All In podcast really putting a good point that says, if we've been valuing Google, Facebook, Snapchat, etc., on these particular types of metrics that were influenced by external factors like the macro, and tech multiples cannot reach that premium because the macro sucks, then it's really hard to justify buying some of these names on the earnings projections or the growth projections that we think are going to happen based upon 2020 and 2021, because those were anomalies. Now, long-term, Google may still be a phenomenal company and it may be worth a buy, but it really depends on how you're valuing it now, given things have changed, along with the fact that TikTok's here and search has changed. And there's just so many different things to take into account in terms of deciding, hey, yes, Google is definitely a buy. Roku got a random downgrade. I'm glad, better entry for Roku. Interesting. Yeah, I'm still not convinced on Roku. The numbers on the financials look great, like a $3 billion revenue, $12 billion market cap. But I don't sleep well at night knowing I have to bet on Roku's earnings to show more people are watching TV ads on Roku. It's that's the hard part for me. Now AWS, right? So Google Cloud, they need to grow to about 6.1 billion, up from 5.7. They've outpaced the growth of their total revenue in 2 years in the past few years, which makes sense, growing at about 50%. Google Cloud's growth is slowing. Analysts predict that Google Cloud revenue growth will slow to 38%, which is still amazing to grow 38% on just the cloud division, but it's lower than 52, 46, and 47, obviously. They estimate Google Cloud revenue to grow to be 39% for the full year, with 53% for the prior year. So last year, they were growing at 53%. This year, probably 37%, which means it's just going to be lower at the end of the day. And that's and we're going to see how that happens on Google. Gabe says he loaded on Mara puts because he's betting that crypto will bounce. Interesting. Okay. We will see if that happens. I think my dad still owns it. And he doesn't. He's saying, yeah, it's about data. I'm like, no, Dad, it's not just about data. All right, guys. So I've got to go. Thank you so much for joining me. 202 people. I will be doing a late night talks live stream today. It is one day before July 27th. All of you that are on this channel probably know about July 27th. I hope you guys enjoyed the video yesterday that I made about it. It means the world for me that you guys have been here. Very exciting. After tomorrow, my life fundamentally changes. So it's nice to be able to share that journey with you. Tomorrow, 9:45, I will be live. I will not be doing the market open, but for those 15 minutes, I will be getting things ready. And then at 10 a.m., I will be making an announcement. And that announcement will be multifaceted. There will be a lot of parts to that announcement. So I would recommend you watch it, stay through with it. And I'll probably live streaming until 12 or even 1, just answering questions and all that type of stuff. But it's going to be a pretty good announcement, pretty cool announcement. And hopefully you guys get to enjoy and see the vision that I'm bringing into the world with my startup company. I really appreciate you all joining. There's going to be a late night stream today, kind of talking about anything before my life changes forever. I don't mean to be dramatic, but it's actually true. Like, my life will change forever. And so I'm really happy and excited that all of you are here to join. And it's going to be fun. So you should let me do the market open. I can probably talk about the market a little bit at 9:45, but it's not going to be the focus tomorrow. All right, everybody. Thank you so much. It's not a course. Oh goodness, it's not a course. Trust me, I'm not selling a freaking course. That's not even a good business model, bro. It's like it's not. Yeah, it's not a course. But it's gonna be fun. Hopefully you guys enjoy it, and it'll be interesting to show it to the world. Thank you guys so much. I will see you later today, and I'll see you probably at late night stock knocks tonight. Bye bye.